Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. Let's look ahead to the upcoming UK inflation report taking place on Wednesday, the 22nd of May. Coming off the back of a week that has seen significant question marks around US inflation, it's the UK's turn. And despite the fact that we have got some other notable events over the course of the week, I think this could be a big mover and potentially the big mover in terms of economic data to look out for. So let's jump into it. First and foremost, we have got the market expectations. The big ticket item here is the big headline is that forecast for 2.3 down from 3.2 in the headline number. So a potential collapse in inflation, essentially. And this is something I've been highlighting on these videos for months now, that disinflation is going to kick in this month as the base effects really do play their role. So moving very close to target, and that's likely to really lift market sentiment for a swift return to easing from the Bank of England. In terms of the core number, that's where we could see some concern coming into play here. 4.2 expected to drop down to 3.6, but that month-on-month reading expected to come at 0.7%, and that could really undermine the potential pathway lower. So we'll dig into that as we move forward. But this is one area within a wider set of data points covering inflation. And as we can see here, in terms of the different metrics of inflation, they're all moving in the right direction. This really does point towards markets feeling quite confident that we're moving in a trajectory that would essentially lead to a normalization of interest rates from the Bank of England in the near future. So let's get into it. In terms of the headline inflation area, first and foremost, why are we going to see this big disinflation taking place this time around? Well, if you look at the middle section on the left, we've got April 2023, 1.21 on a monthly gauge for CPI inflation. That's going to drop out and it's going to be replaced by whatever's going to happen this time around. Markets are expecting 0.3. Even if we see something a bit above that, we'll still see significant downside in terms of inflation. So between this current metric and the reading next month as well, which is pretty hefty as well, we're likely to see a decent chunk of disinflation taking us back down towards target. Are we going to hit target in the next 2 months? Well, we better have, quite frankly, because if you look further out, you can see here June, minimal inflation, July, negative inflation, August, a bit higher, but certainly lower than any of the recent months that we have been seeing at the moment, or the past 3 out of the last 4. So really, it's the case of like this month and the next month, we need to see a return to target, because beyond that, there's a good chance that inflation is going to rise a little bit from there. Now, if you look at the bottom section of it, what you can note here is that we've seen a significant uptick in terms of that 4-month annualized reading, which essentially is me trying to pick out the last that chunky section we've seen recently and saying, what kind of trajectory is that putting us on? Because out of the last 4 monthly readings, 3 of them have come in well above where we would like them to be. Well, that's put us on a 309 trajectory according to that 4-month annualized. Of course, the year isn't necessarily going to play out like that, but it does highlight the fact that we've seen a significant uptick in terms of the sort of trajectory of inflation over the past 4 months. More notable is the fact that the 10-month annualized figure, so essentially where are we going to stand in 2 months' time? Well, if we were to see 2 readings coming out that were similar or average for everything that's been seen over the past 10 months, for the next 2 months, that would take us down to 1.58. So the possibility of significant disinflation. The problem here is that if we were to look at that 10-month annualized, you'd be looking for average numbers for the last 10 months. But that's not what we've been seeing recently. We've been seeing stronger inflation metrics over the past 4 months. So unfortunately, recently, inflation has been moving a little bit higher on that monthly gauge. In terms of the core reading, we have again been seeing the near term, so the 4-month annualized ticking upwards of 4.24, expecting to see significant disinflation, because once again, we've got 1.29, then 0.8 dropping out in the next 2 readings. So between those, we've essentially got 2% inflation dropping out. So hopefully we can see those monthly metrics stay low. 0.7 is expected. Hopefully maybe that creates a low bar to be overcome or undercome, or whatever. Essentially, Is it the case that because we've got 0.7 that it's going to come in below? 0.8 is something that we haven't seen since May of last year. So really the question mark here is, are we going to see significant disinflation? Yes. What will the markets be responding to? Will it be the disinflation evident within the year-on-year figure and the heightened chance that we see interest rates cut in the near term? Or is it going to be the potentially strong monthly readings and the fact that those annualized figures continue to move higher, pointed towards a potential secondary surge in inflation as we get back towards the back end of the year? In particular, well, actually, the middle of this year, I'd say, once we start seeing some of these smaller numbers coming out, but certainly at the back end, when we're seeing sort of negative readings dropping out, we're likely to see a resurgence in inflation. But in actual fact, you look at the next 6 months beyond these coming two readings, and you're looking at the likely eventuality that we see inflation moving higher once again. And given the fact that we're not expecting to see inflation move to target over the coming metrics, it's going to move a lot closer. Because, like I said, we've essentially got over 2% of inflation coming out. We've just got 2 months worth coming in. So if you say, we could reasonably be in the high 2%, still above target. And then we're likely to see inflation moving higher from there. So there could be a sort of narrative around that sort of, we haven't hit target, might reflate going forward. But I think there's also going to be more likely a chance that people look towards it and think, great, UK inflation's seen a massive decline. We're probably going to see lots of headlines about this collapse in inflation and, that the Bank of England's done a good job. One thing that has been a concern and is a concern is elevated wages. We've seen it commentary coming out from the ECB, and they've highlighted exactly that. This is the real earnings figures, or total real earnings minus inflation here in the UK across two different inflation metrics. And you can see that we have now been in a sort of protracted period where we've seen real earnings rise. That is good for the consumer. It's good for the UK economy because it means people have more money and they're likely to spend it. And, in a world where we've seen high inflation, people need more money. And if they earn more money over and above inflation, it means that they buy more. And if you look at the retail sales numbers, retail sales have seen an uptick in terms of the value, but the quantity that people are buying has been declining over recent years. So perhaps the longer we see real earnings in positive territory, the more people actually start to buy more in terms of quantity. So good for UK businesses. But nonetheless, that move higher in terms of real earnings does and is likely to prove inflationary. So it's something to keep an eye out on. It's something that likely the Bank of England will be keeping an eye out on. Talking about the Bank of England, we can see here that market's currently pricing 54% chance that we see a rate cut in June. So the next meeting, essentially, we're expecting to see a rate cut. That's not long now, so June the 20th. And then following on from that, where are we going to see the next rate cut? Well, it's essentially a coin toss for the September meeting and possibility of even further at the back end of the year. So markets are feeling pretty confident at the moment that we will soon start to see easing from the Bank of England. But like I've said, inflation needs to get back down to target in the next 2 months, this coming reading and the one after that. Because beyond that, it's likely we're going to see inflation moving upwards from there. So certainly if we were to see inflation coming in above expectations this time around, you might say, well, look, we're still seeing massive disinflation in terms of that headline number, the year on year. But it's also worthwhile bearing in mind that if we see above expectation numbers now, how are things going to look when in a couple of months' time we start seeing inflation moving towards the upside, because base effects at that point might not necessarily be as favorable. So in terms of some of the charts to watch, here is first and foremost cable. So we have been seeing the pound moving higher against the US dollar over the past few weeks. And notably, if I was to get, say, the UK 10-year yield alongside the US 10-year yield and overlay it, there we go. What we can see here is that by and large, we're generally seeing this tracking it. So it's really a reflection of the sort of expectations within markets around interest rates, around inflation. And the fact that we're starting to see UK yields relative to US yields sort of basing out here and maybe gathering some momentum, that's pushing the likes of cable higher. So the question mark here is, do we see inflation coming in higher than expected? It's likely to go into push UK yields relative to US yields higher. That could give us further upside in terms of the pound. Or do we start to see that rolling over if we see UK yields coming down, i.e., people really reacting to the disinflation happening in the UK? I think if we see inflation coming in line with expectations, markets are most likely going to see that as a good thing, because it's probably going to shock some people the amount of disinflation we're going to see this time around. Like I said, such sort of big figures dropping out from this time last year. It's really going to shock people, and they'll probably think that this is something that suddenly, the Bank of England have finally cracked the code, and that they've done something more recently to drive down inflation. This isn't a recent thing. This is just in relation to what happened a year ago, and then we've got these massive numbers from April dropping out. And in actual fact, if you look at recent months, we've struggled to contain inflation, and we've been seeing signs of reflation, really, in terms of those monthly metrics. So if it comes in line, I think there is a good chance that we see this weakening as we see the sort of relative rates and expectations shift. I think for the US, there is a case for US dollar strength, because I think markets are pricing in too much of an optimistic outlook in terms of rate cuts from the Federal Reserve. September rate cut, I don't think we're going to be anywhere near 2% target by that point. So if the Federal Reserve want to rescue an economy that doesn't need rescuing, and at that risk another surge in inflation, then that's up to them. But certainly I think there's significant risks that markets are too optimistic about that, and that would point towards the potential for downside as we see strength for the US dollar coming into play. Near term swing low 239. No, it's not. That is a percentage. Let's get regular on and get rid of that. Actually, let's get rid of that entirely. There we go. Right. So 124.45 to the downside if we were to pull back. I mean, how would I view this? Well, we have seen this sort of pullback down through support. There's a good chance that what we're seeing at the moment is a retracement of this wider move. Given the fact that we're coming also in line of that swing high here, this is a really interesting area of resistance here between the sort of deep fibs and the horizontal. There you go. And that horizontal resistance level of 127. So good chance we do see this roll over. If we see inflation coming in line with expectations, then yeah, I think there's a good chance that we do see some weakness for this pair. But keep an eye out for those monthly metrics in particular. Let's just go into the shorter term and see exactly how this is playing out over the short term. You can see we have been seeing some strength coming into play. It's sort of turning upwards once again. I would say this, as things stand, does point towards the potential for another sort of break towards the upside, given that sort of upward trajectory and this sort of sideways consolidation. So further upside does seem likely at the moment. But if we are to see this sort of big disinflation move coming into play, and if we start to see some sort of tones from the Fed that would indicate that perhaps markets are a little bit too optimistic, and bear in mind we have got the FOMC minutes coming out next week, and then we could see this market potentially coming into some selling pressure after what has been a very impressive period of upside for the pair of late. Here's the FTSE 100. Essentially, we have been seeing it really outperform many of its peers, in particular the US markets. You can see it's pulling back into support, and US markets now rallying into record highs. So are we going to see this sort of flounder? Generally, what happens is when we see markets sort of struggling a bit, that's when the FTSE 100 outperforms. When we see markets doing well across the board, generally the FTSE 100 underperforms. So the fact that we've seen record highs for US markets does to me mean that we're probably going to see a little bit of the FTSE taking a back foot, and instead we see some dominance of some of these other markets. Certainly over the near term, you're going to be looking at this 84.06 as a key area of support, and it looks like we're respecting at the moment. And if we break below that level, it looks like we're coming for a wider retracement. You've got your fib levels here: 83.35, 82.92, 82.50, 81.97. So we'll play it as it comes if it comes into this deeper retracement zone. And certainly the big question mark here is, do we see inflation coming in above expectations? And if it does, then that's going to be really troublesome when it comes to 2 months down the line, when we start to see inflation moving higher once again and really putting pressure on expectations for future interest rate cuts from the Bank of England. Like I said, there's an outside chance, a strong outside chance. I think it was 40% chance that markets are attributing to 3 rate cuts this year. I think that might be optimistic given the fact that the disinflation over the next couple of months are probably the be all and end all for the time being. And we might see inflation moving higher from then onwards, which could be a concern to the Bank of England. So really, this market could come under a bit of pressure if we were to see this rolling over somewhat going forward. And finally, let's look at Euro Sterling. Now, this is interesting because we're talking about a currency that is in a similar position, right? The Eurozone is similarly kind of getting back down towards target. There's a significant amount of inflation sort of creeping in recently. Well, we're seeing it weaken at the moment. So we're seeing some strength coming into play here for the pound. And that has really been evident when you look at cable, how well that has been doing of late. This really highlights the sort of notion that, yes, we will see disinflation over this meeting. But if you look beyond it, in a month or so's time, we're going to see inflation moving higher once again. And that's sort of helping to drive some strength here for this market. The UK economy doing relatively well if you look at the last GDP number. And so, things looking a little bit more positive here. From a wider perspective, you can see that this area of support has held a number of times in the past. It's certainly very notable, this zone here. Down here, let's just try and grab some of these prior lows. So you can see here, this zone of support, time and time again has held up. Well, as things stand, we're sort of rolling over, weakening. I think there's a good chance that what we're seeing here is another retracement. If you look at this move coming through here, we've got a deep retracement there. Are we going to see something similar? We're at the 61.8 at the moment. It's a good chance we do see some further downside coming into play over the near term. But certainly the ability to not only drive down that year-on-year figure, which is pretty much a given, but also see some nice low numbers on the month-on-month readings. That's going to be really key to seeing the pound weaken and the potential for this pair to move higher once again, sort of continue on this trajectory that has been upwards but has retracements with it. So this pullback, I think, over the near term could continue to play out, but there's a good chance that we do see it then turning upwards once we see this inflation report coming out, obviously depending on exactly how it comes out. But there's a good chance we do see some pound weakness as people really are caught off guard in some ways by the sheer size of the disinflationary move that is likely to come into play this month. But certainly keep an eye out for those month-on-month readings. They will be crucial for us to be able to determine whether the recent trajectory in terms of inflation is pointing towards another surge down the line. And certainly it's something we have seen across the board, really, and the UK is no different. So keep an eye out for that. That core 0.7 reading in particular concerning. But if we saw a similar kind of thing for the headline number, to me, any near-term move, which could just be in response to the year-on-year metric, could be a relatively short-lived one when you then look down the line and realize exactly what markets are going to have to contend with once they realize that inflation might not hit target. And if it does hit target, it's probably going to be brief and start to move higher once again down the line.